The Super Bowl is this weekend with the Chiefs' odds of a three-peat against the Eagles at only a slight 1.5-point favorite. It is gonna be a nail-biter. That means it's anyone's game, but I found 5 stocks that make money no matter which team takes home the Lombardi Trophy. That's because the American Gaming Association estimates Americans will bet a record $24 billion this year, and the closeness of those odds could mean it goes even higher. 6 years from the landmark Supreme Court case that allowed state legalization of sports betting, and the NFL quickly established itself as the runaway favorite for mobile betting. That market has boomed with 38 states allowing sports betting and Missouri having legalized it but still rolling it out. It's taken U.S. gambling to $25 billion last year with projected 28% annualized growth through 2028. And even without full nationwide legalization, a mature market of around $50 billion would be double last year's market size in just 4 years, and these 5 stocks are leading in that race. If we get word over the weekend that betting numbers were higher than expected, these are going to be the stocks to own. First up here is $2 billion Genius Sports, ticker GENI, a stock that has seen a lot of interest from retail investors and even Wall Street bets over the last year, and I really like the revenue model here. The company has partnered with over 700 teams and is an exclusive data provider to the NFL, making its money on licensing and revenue sharing with sportsbooks. What it does here, Genius packages the game feeds with augmented reality, showing the odds of specific plays and bets right on the screen. From this, it can then sell that feed to media companies like Verizon that want the higher audience engagement, as well as selling it back to teams that use it for data analysis. The company makes 3 times more on in-game bets than those pre-game wagers, so this augmented reality game feed is a goldmine for Genius. Revenue was up 18% over the year to the most recent quarter and drove a 45% increase in EBITDA earnings. And here the new FanHub platform could drive even higher engagement using AI optimization to target campaigns specific to users. Full-year revenue growth for Genius is expected to slow a little to 15% and to $590 million, but for the company to turn GAAP positive on earnings this year, a great sign for investor confidence. Shares now trade for 4.7 times on a price-to-sales basis, which is a little expensive considering that slowing sales growth and the historical valuation averages we see here, but it's been good about beating those expectations, so could continue to grow into these valuations. We're just getting started on our list of Super Bowl stocks to buy, but there's another group I'm buying, and in fact, I call these my forever stocks because I don't even have to research them anymore. I just let them run higher, and the proof is in the returns, with the group up an average 94% last year alone. I'll leave a link to that free report on those stocks in the description below. That report is totally free. You're going to see the first stock immediately, and then they're going to email you the full report with the other stocks. It's an easy way to support the Let's Talk Money community and see some of my favorite stocks to buy, so look for that link below. Of course, we can't talk about sports betting without hitting DraftKings, ticker DKNG, a stock I recommended in 2022 and sold for a $67,000 profit, up 182% in less than a year. DraftKings is running a $5 million jackpot bonus for new bettors during the big game. Users can bet on which player will score the longest touchdown for a share of that bonus pool. DraftKings competitor Fanduel is also running that same promotion, so there is a good chance we hear better than expected new user signups for the 2 platforms, which would be great news for these other stocks on the list as that picks and shovels play into the theme. DraftKings is more sports focused than we'll see with its competitor next, though it also has that iGaming casino platform. The company grew to 9.3 million unique customers in the third quarter and booked $4.6 billion in revenue over the last year. That gives it about 33% share of the combined U.S. online sports betting and iGaming market, a market worth just over $11 billion total, and it's just under the 39% share controlled by FanDuel owner Flutter. DraftKings has rolled out updates to its app over the past few months, improving the user experience and its betting interface, which has helped drive that growth in betting. Now that and a focus on the faster growing US market has helped it outperform on growth, with a 30% plus revenue growth last year expected to accelerate this year. And with that kind of growth, surprisingly the shares aren't trading as expensive as you might think. DraftKings is priced at about 4.4 times on a price-to-sales basis, 10% below its average over the last 4 quarters, so this is that rare mix of strong growth and cheap valuation. Much larger than DraftKings, but with a similar share of the US market, is $47 billion Flutter Entertainment, ticker FLUT. Also running its own $5 million jackpot bonus to new bettors during the Super Bowl, Flutter operates the FanDuel sports betting platform in the US with some very popular brands, including Paddy Power and Poker Stars. Flutter is by far the largest overall platform, with 32 million active users. And while the big growth story over the last few years has been in the United States as states legalize sports betting, Flutter's competitive advantage may come in its international exposure. In fact, just 37% of its revenue is from the US, giving it about a 39% market share. That's only slightly above the 33% combined OSB and iGaming share claimed by DraftKings, but Flutter is also seeing that international growth as well. The company also has a stronger iGaming lineup, with over 100 billion gaming wagers made last year. That is 25 times the number of sports wagers it booked. So you see, while sports betting is getting the attention, that growth and demand in iGaming is really where the real money is at. Flutter's revenue growth, like some of the others we'll see on the list, is expected to slow to 16% this year to $13 billion, though earnings are expected to jump 85% as the company transitions from that growth focus into profitability. That's going to help on these valuations, which really aren't that expensive to start, trading at a price of 3.7 times that sales. That's about a 24% premium to the average valuation over the last 4 quarters, though it is cheaper than DraftKings shares. Now, between the two, Flutter and DraftKings, I really like Flutter's international exposure and think that's going to be the growth engine long term. But right now, DraftKings has the clear advantage in its US-focused strategy, booking twice the revenue growth to its rival. Now, as we saw, shares of DKNG are slightly more expensive on that price-to-sales basis, but not relative to the kind of growth advantage it's seen. So I would pick DraftKings over Flutter right now, but definitely keep an eye on FLUT for that future, as maybe the US growth slows for DraftKings and Flutter pulls those international levers. We've still got 2 more stocks to watch, including a penny stock with strong momentum, but I want to get your input on this as well. The online gaming market looks to be one of the biggest trends over the decade, growing from just $8.8 billion in 2021 and still with the potential to double from there. A Pew Research survey found that 1 in 5 Americans have bet money, and this growth is all before the biggest states, Texas and California, still deciding on their legalization. So my question for you is, do you think the sports betting trend continues, and which stocks are you watching in this theme? What other big picture trends are you watching in stocks? So scroll down and let me know in the comments. Next on our list, Sportradar Group, ticker SRAD, is a very similar business model to Genius Sports, though a much larger company, about 3 times the market cap. Through game feeds, the company collects and provides data analytics, leveraging that content to sell to the media companies, and then back to the teams, as well as driving engagement and customer acquisition for the sportsbooks. It's inked deals with nearly all the major leagues apart from the NFL, including 400 leagues and 90% of the sportsbooks. Michael Jordan was an early investor in the company, founded in 2001 and producing 450,000 live streams a year, and a broader depth of coverage than we saw with Genius. What's interesting here, kind of like what we saw with the Flutter and DraftKings comparison, here Sportradar is much more internationally driven company, aggressively buying content rights for sports in other countries. So as media companies want to expand internationally, they're going to have to buy those licensing rights from Sportradar, driving its 78% foreign revenue. Now that's helped drive a 25% annualized growth in revenue to over €1 billion last year, stronger than at Genius. But the question is, can Sportradar expand faster into that competitive US market? And here also, analysts are expecting that slowdown to 14% sales growth this year, just 1% under what's expected at Genius, and shares are trading for almost the same price-to-sales valuation at 4.5 times and well above those historical averages. This next Super Bowl pick is a penny stock up almost 60% in just 3 months, but it's not the only penny stock I'm watching. In fact, the penny stocks highlighted in the video linked in the corner are up an average 116% since first recommending them, so make sure you check that out next. Gambling.com, ticker GAMB, is a penny stock here at just $552 million market cap, and with strong momentum lately. The company is a marketing and odds content provider across 6 sites, driving customer acquisition for sportsbooks, really trying to do in the gaming industry what Booking.com and NerdWallet have done for travel and personal finance. So the sites generate revenue through one of 3 models, CPA, revenue share, or a hybrid, and through customer leads to those sportsbooks, along with a growing share from advertising and subscriptions. That is a good model to have, considering the rates betting platforms like Fanduel and DraftKings are paying for new customers. The chart here shows the percentage of revenue going to marketing for the 2 platform leaders, and that drop is a little misleading. While DraftKings put 75% of its revenue to customer acquisition in 2021 and just under 20% expected this year, that revenue has increased from $1.3 billion in 2021 to $6.3 billion this year, meaning the total spend has increased. Revenue for Gambling.com has jumped along with that industry growth, booking a 60% annualized growth to $108 million for fiscal 2023, most of which was from North America. Management has also affirmed its full year 2024 guidance around $126 million, which would be a 16% growth, but that could accelerate with more states joining the trend in legalization. The company is aggressively adding new sites and platforms to take more market share through that industry's growth. Just last month, Gambling.com closed its acquisition of Odds Holdings, adding a state-of-the-art platform for real-time odds data. That follows last year's acquisition of FreeBets.com, expected to add $10 million in revenue and $5 million in EBITDA earnings. As we've seen with most of these stocks, shares are trading for a premium to those long-term averages, but not expensive for this kind of growth. At a price of 4.4 times revenue, that's about 17% higher than the 5-quarter average, but the valuation drops to just 3 times for expected sales this year. So if it can even come close to that number, shares could move much higher. See the 5 stocks I'm buying for the next 30 years, my forever stocks, up 94% last year alone, with the link in the description below. Or click on the video to the right for the penny stocks that could be your next 10x returns. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.